This is episode 49 with Christa Rapoport. Welcome to Spot on Insurance. My name is Ted Taveras. Join us each week as we speak to insurance professionals, attorneys, regulators, and compliance specialists on topics ranging from improving your agency to staying on the right side of the law. Subscribe and stay informed on the effects of new trends and disruptive emerging technologies on your businesses and your industry. Thank you for joining us to explore part 2 of our conversation on the surplus lines market and the role it plays as the insurance industry's technology partner. My guest, Christa Rapoport, is a former surgical registered nurse, as well as a University of Virginia trained attorney. She spent years in general corporate, regulatory affairs, compliance, and growth strategy in the insurance industry. She's worked with AIG and at Tokyo Marine, as well as multiple startups. Christa helps insurers, investors, technology companies, brokers, and health associations on many state and federal issues. Currently, she practices at Nelson Taplin Goldwater, a government relations firm primarily focused on the insurance industry. Her practice spans all three major insurance groups: property and casualty, life and health, and workers' compensation. Christa, that manicurist you were referring to earlier, the one that has to use the non-admitted market because of her work with stars. Once this type of work has been examined for a couple of years, does the regular market then pick it up?
Yes, in fact, sometimes, let's say you have a product. In fact, a good example are the early cybersecurity coverages. It was very difficult for standard insurers to get these policies and rates approved by state departments of insurance, who would say, yeah, we understand this is needed, but look, you just really don't have the data to support your rates. So some of these large insurance groups, which had both standard insurers and excess and surplus lines insurers, it's excess lines in New York, which is why it's saying excess lines. They would then say, turn to the surplus lines business units and say, hey, why don't you guys take this and develop this? And after those policies are issued for a number of years, there is data. And so then that's data that could be shared with the standard lines business unit. And then they can file this and make their own policy forms. So yes, I think that surplus lines is a really great thing for large insurance groups because they can be innovative. They can go out to the market first in surplus lines, and then after getting experience, also offer it on a standard lines basis. There's times when you'll see insurance group have both a surplus lines product and a standard lines product, and that's because you still have individual entities that are a little unique and need a surplus lines product.
There's a lot to this surplus lines market. How is it all regulated?
I think market conduct is a big thing. It is one, are consumers in a good place? Are they being, are their needs being taken care of? And then two, a lot of it has to do with the financial aspect, the payment of surplus lines tax. And that is, really a lot of it falls on the brokers. One, two, if it's a single state risk, that's easy. But when it gets to be a multiple state risk, making sure that they follow the rules, that they pay taxes. It might be a franchise tax in New York, as well as the stamping tax for the fees for each policy. Right. And that they're providing data that's necessary to the insurance group. Because the weird thing about surplus lines insurers is that they are not allowed to advertise. So who advertises? It's surplus lines brokers. And that advertising is a very important responsibility. We are then governed by the fair behavior laws. And that means that it has to be truthful, has to be correct. There cannot be false and misleading advertising. And so that's a big thing. You don't want to, if you have complaints about the advertising, that the advertising promised a lot more coverage than they actually got, then there's a discrepancy and that can cause problems. Another area where you might have complaints are when a consumer alleges that they were not refunded all the premium that they were owed after they canceled the policy. Pristine record keeping, using fiduciary accounts, not mingling different types of money with premium is very important. There's a theme here, and it's complaint management. Please be careful to recognize that there should be someone who's tracking complaints, whether it's by telephone, email or letters or fax, whatever, text, and write those down, and at least on a quarterly basis look at those complaints and see if there's a pattern. Because one, even if it's not something that triggers an insurance regulatory exam, it could be something that makes you think, oh, this is a liability risk. I see that this is happening in my brokerage, my agency, and let's
Right.
let's correct it. So complaint management is really good. There are certain things that sometimes aren't thought about, and there are things like improper payment of commissions to unlicensed insurance producers.
Mm.
It's very important to make sure that you're not paying fees to unlicensed folks, or if there's something that is like a service that's being done, it may not be appropriate for commission. You might say this is a referral fee. So you have to check with the state laws and really pay attention. It's really important to take part in industry trade associations, because those trade associations will give you state by state grids on how to conduct business in state after state.
I'm inclined to believe that most of our listeners understand a surplus lines tax filing process, but there are other things that may not be so easy to grasp. For example, can you delve into how a broker or MGA might circumvent the tax regs?
There was a broker, and she would look at states and figure out which state had lower rates. She encouraged the employer to get a PO box so she could have a different state of domicile,
Right.
and then she paid to that state alone and not the other states. And how this was found was, I mean, like, this seems like perfect. There's a surplus lines policy. The employer is paying a low tax rate because these taxes are, part of the cost of surplus lines, besides the premium. And so what happened was, unbeknownst to the employer or the broker, the insurer actually was collecting data on claims and premium and locations, and that was fed into a state department of insurance, who said, wait a minute, the premium is being reported as a multi-state premium by this insurer. How come there's only taxes being paid to this one state? And when that State Department of Insurance went in to investigate, they saw that this had been happening in many different circumstances. So recognize that the insurance departments receive multiple types of data, and
Hmm.
sometimes they don't look at it. You might be fined for 20 years, but if they should look and do a true up and see discrepancies, that's when you see the problem.
I agree with you that previously it might have taken 20 years, but in your opinion, has today's ever evolving technology sped up the amount of time it takes the states to investigate?
Yeah, I think so. I think the states, especially the market conduct groups, they are working to have a really easy and facile way to look at data and to identify issues. They are faster, especially on the insurance level, and I think especially on the tax and revenue level. Um, if a state is starved for funds, they're going to look and see who do we suspect is not paying. When there is a surplus lines premium, there are
Hmm.
fees or taxes associated. Those have to be, the compliance for that needs to be managed by producer.
Earlier, we discussed failure to make diligent effort to place coverage. Do you think some brokers do not go through the proper diligent effort because they assume coverage is already on the export list?
Well, rumor has it that from time to time, some do not make a full diligent effort, or they will go to the same insurers, certain insurers that they know don't have a type of business, instead of asking around. But I think that that's a sloppy habit that it's not a best practice.
Krista, could you address for me false and misleading advertising, specifically MGA versus just a broker?
When you're managing general agent, that's a recognition that you have 5% of an insurer's book of business in a state, and it's a special license. So there have been some brokers who were investigated for falsely saying that they were an MGA when they're a surplus lines broker, because that is a different standard, and that was considered to be false and misleading. So just a caution that, whether it's what you're saying in your telephone scripts, or solicitations or websites, to be very exact with what you're saying, because words matter. What we do is so regulated, and everything that we do, they're defined, and these definitions shift from state to state. So if you have a multi-state practice, make sure you recognize that you're doing what's necessary.
Well, we tend to see some of these false and misleading advertising situations where the client's real problem is they aren't sure of their role, not sure if they're an MGA or a broker. We get that a lot. Can you clarify the difference?
Yeah, I think that when I think about an MGA as a practical matter, I'm thinking about it's basically has all the operations in an insurance group, and sometimes they're handling whole books of business for an insurer. For instance, commercial trucking. There are some MGAs they do they direct policy forms, they do the rate making, they have everything prepared, and then they file on behalf of the insurer. They're doing underwriting, claims,
Hmm.
statistical reporting, premium collection, premium return. That it's the whole suite of insurance company activities. And so that is, but you might have a producer that's doing something a little less. And at one company, we would distinguish the licensed managing general agent. That MGA had a different contract than those who are doing a lot of things which are allowed under the producer statutes, and we call them program administrators, handling a program. So, because an MGA has the power of the pen, you're giving them a lot of authority, a lot of power, a lot of responsibility. So, it is recognized in the law as being something different than a broker.
Spot On is sponsored by Insurance Licensing Services of America. Need help with corporate name changes, annual returns, or surplus lines tax filings? Feeling overwhelmed? Well, if you're looking for experts in regulatory compliance, you've come to the right place. ILSA provides the industry with over 50 services. To learn more about the company and how they can help, visit ilsainc.com.
I'd like to move to unearned premiums, specifically refunding. Is there a statutory requirement as to how long unearned premiums are required to be refunded?
Yes, and in fact, when there's pro rata, there's different formulas depending on the type of insurance coverage, when something has to be refunded. So where this gets more complicated is if it's for auto claims or auto policies. In those cases, the broker really should rely on the insurer to make sure they understand the rules for a particular insurance type, how to refund it. Because if you're doing one type of refund and then you switch to handling claims from another state or a different product, and you don't understand that it's different, then those are going to generate complaints, and those complaints will trigger the targeted exam against you.
Here's something you may find funny. It has to do with improper payment of commissions to unlicensed insurance producer. Is this still happening in 2018? Certainly not, right?
Oh, heck no. Because you know what? It's like my friend Bob, he helped me with this. I'm just going to give him a point. Think about a different way to structure a relationship. Think about whether it is a referral or business development, and you give them an annual fee for what they're doing. Don't split the premium when Bob is only licensed in Arkansas, but this is a multi-state risk and it's Texas, Louisiana, and other states. No, not able.
Tell me, how about trade names? How does the use of an unapproved trade name play into issues of, let's say, surplus lines?
This is really a general thing you'll see. You might have a really great, catchy name, let's say Risk Mavens LLC, for an all-female surplus lines brokerage group, and that's fantastic. And you go to you get a trademark or service marked, whatever, and then you decide, oh, that's too unwieldy, and I now have my son and my nephew helping me, so let's call it Risk Superstars. Well, you're able to do that if you have to refile with the departments of insurance to have a doing business ad. So make sure this is general corporate cleanup, that whatever words you're using are important, because we license the entity and we expect to have the proper name. And so if there's any deviation, there has to be permission and consent from the state.
So you're saying this is basically solved with a DBA?
Yeah.
Here's something we hear a lot about today: Bitcoin. What are you seeing in this space? Do you think coverage for Bitcoin is ever going to go with the admitted market?
I think, as you know, one thing for Bitcoin, I think it's interesting because, except for recently, it generally just keeps going up and up. So I wonder,
Mm-hmm.
why would you ever spend it if it's, going up and up? So it's slightly deflationary from that aspect. But what I find it more interesting is the Bitcoin ledger technology, and I think the insurance industry is seeing that this could really help make things so much easier for reinsurance and international risk and claims handling. But in terms of the Bitcoin technology itself, there's so many unknowns. I mean, let's look at the environmental risk alone. It uses more energy than a lot of than many countries. Having, the thing that makes it safe, having all these different folks managing the Bitcoin, that is a huge energy expenditure. So the energy, the safety, the fact that now you have Bitcoin thefts, and since it's untraceable, how do you get recourse? I don't think that this is something that a standard insurer says, look, I don't understand it. I don't see that even if I offer you as an insurer risk management, how I could reduce your risk of loss. I think it's a perfect place for surplus lines if that should happen, but I actually think that it's really going to stay self-insured for the most part, because if I were insured, I don't think I'd be that interested in insuring this risk for a time yet.
Okay.
And I think we see this with like a lot of risks. I mean, like we saw this with the self-driving, with the ride-sharing app companies at first. No one knew what to do with it, and now we have many ride-sharing, and we now have home sharing as well. For and a lot of this kind of came from um, it being self-insured initially, and then there's surplus lines policies or treaties, and now which would drop down and cover the passenger or cover the stay in a personal home, and then release. So I think that as we get more information, that these will be first insured under the surplus lines market, and they might
Right.
stay there because the technology keeps evolving. There's so many neat things happening all the time. Even if we look at something like cancer treatment, we went from immunotherapy and now it's gene therapy, and now we're looking at bacteria, the gut biome. If we can tell things about people from like this whole group of bacteria that resides in the people, and we can have cancer drugs that play off of this. So as these science keeps evolving, and technology keeps evolving, I think surplus lines has a huge role in technology, a huge role in science, a huge role in ensuring our society as it changes rapidly.
So it can't go to the admitted market until there's enough research. But because it keeps evolving, you're looking at it remaining where it is in the surplus lines market. Is that what you're saying?
Yeah, I think so. Now, I mean, the other thing that in the surplus lines market, you have to think how much capacity is there. It means how much financial strength is there. The technology market is humongous. It's the market capitalization is astonishing. So there's also a question about, is there even enough insurance capacity to handle all the technology? I think it's more conceivable that technology companies might be turning to other alternatives such as captive insurers that they own. There's one thing about surplus lines. The reason why I just wanted to emphasize that it's the freedom from form and rate filing which makes it so flexible. It's a great alternative. It's a great solution, and it's one that companies should not be afraid to look at. There's one caveat. They have to make sure they check the financial reports from
Mm-hmm.
AM Best or Standard & Poor's to make sure that it's a well-run company. And that's something that's a broker duty. So brokers, do your homework, do your due diligence, and do it every year.
Christa, you've given me, and I'm sure a lot of our listeners, quite an education on surplus lines and insurance law. If they should have questions or need your assistance, how can they get in touch with you?
My contact information is on Nelson Taplin Goldwater's website. They could send info at ntgconsultants.com, or they could go to www.ntgconsultants.com, or my own email address, which I have. It's csrapoport@ntgconsultants.com.
You've been listening to Christa Rapoport on Spot On Insurance. Christa, thanks for joining us.
Oh, it's my pleasure. Thank you very much.
Visit spotoninsurance.com, where you discover an ever-growing library of podcasts, videos, articles, and online tools by professionals for professionals to enhance your insurance education. By the way, that's where you'll also find our podcast notes and bonus resources. Please don't forget to click the iTunes link to rate and review, and let others know what you think of Spot On Insurance. Thank you for joining us, and we'll catch you next week.